Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin and make sure to check the timestamps for same, updated or new to see what changed compared to the previous video. In this medium time frame bullish scenario, we are looking for a 5-wave move up, preferably 4 is in. We're looking for 5. Most common target area for 5 is between 46.1k and 52.2k. If we then zoom in to this wave 4, then we have a potential WXY scenario here, where wave Y is then finished in a WXY flat complex structure, Y being a triangle, where we then have 5 waves sideways. All of the waves have to be zigzag structures, where you have wave A, B, C, D, and then this here is your wave E. So that means you want to see continuation to the upside and you want to see this high taken of wave D. If we look at another scenario, then wave Y was already finished here, and this move to the upside is part of an impulsive structure, and then a wave 1, 2 continuation in a 3, or in a more bearish scenario still, which is something we still have to consider. This is a wave A, you look for a B and a wave C. However, for me that has lower probabilities, because this range over here already took the liquidity that was resting above the highs and the range over here. So if price moves up, it doesn't really make sense to form a B and a C down to grab the liquidity here, while instead I think the probabilities are higher to see bullish continuation as written here as well once price takes these highs. So then I'd be looking for a 5-wave structure to the upside. Now this then translates into this scenario here, where we're looking for a 1 or A, 2 or B, and then a 3 or C. Of course, the preferred scenario here is then a wave 1, 2 and up if price takes this high. In this scenario, price is bouncing on top of the 0.382 fib, taken from the low to the high. Common target for B, less common for 2. However, this wick over here hit the 0.5 Fibonacci, which is a common target also for 2, so all good, all fine. If we then again zoom in to this wave B or 2 and look at these scenarios that we can have in this range over here to see if it's finished or not, the first one would be a not finished scenario, where then we're looking for a W zigzag, X zigzag, and then eventually in wave Y, we are looking for a flat structure here, or a potential triangle and then A, B, C, D, E. But in both of the cases, you're going to be looking for this high to be taken first before taking the low over here. And then if price takes this high, we can observe the reaction, right? Because in a flat structure, you want to see resistance and price moving down. While if we're looking for a triangle, you're going to be looking for an internal range here, not taking this low before then continuation to the upside. Now it has to be said, we do have some resistance above the blue box here between 44.9k and 45.3k. On the medium time frame, the bearish scenario is that we already have a finished 5-wave structure, where wave 5 here ended with a ending expanding diagonal. Now an expanding diagonal is a rare structure, and therefore the probabilities are not on the side of this scenario where this high is a 5. Instead, probabilities are therefore higher. This high here is either a wave B or an X, which then increases probabilities of this move to the downside being a C or Y, and therefore increases probabilities to take the highs at a later stage. However, we have to always consider bullish and bearish scenarios in Elliott Wave. So if this over here is the high, then we are looking for a bigger correction to the downside, where we are then having a wave W to start with in a zigzag, potentially an X over here, right? For then a wave Y to the downside, forming a bigger wave A, as then I'd be looking for a bigger corrective structure to the downside. Now, in the micro scenario, that could mean that here you're going to be looking for also a triangle, but this time you don't want to see the high taken, right? In the bullish scenarios, you want to see this one taken, while in this bearish scenario, in this triangle here, A, B, C, D, E, you don't want to see this high being taken. Instead, you want to see continuation to the downside. If we look at this range locally, then it's been a very, very nice range so far. Yesterday, we were having a live stream as price was here observing the reaction, right? We didn't see continuation. The value area high was showing us some resistance, some bear CVD. Price moved down. As mentioned in the live stream, it increases probabilities to look for a rotation back towards the downside. Bit of a retest of the white box, moved to the downside and very nicely found support on this white box over here, and then we move back to the upper side of the range. So now we're at resistance once again. If we look at these CVD divergences, then you can see we have still these bullish CVD divergences here, higher low in price, lower low on the CVD. Target is this high. Now this bullish CVD divergence is with quite a big wick over here, which does lowers the probabilities a bit, and also this bullish CVD divergence here is with a wick. So preferably what I'd be looking for is divergences very locally. So I'd be observing CVD on the right side here of the most recent low, looking for potential bearish or bullish CVD divergences on a 3-minute time frame, but that's very low. We have some bearish CVD on yellow over here, lower high in price, higher high on the CVD. But on the 50-minute over here at the moment, there's not much going on. We don't have bearish CVD divergences, and we also don't have bullish CVD divergences locally. So if we then look at the probabilities of these different scenarios, then on the medium time frame, the probabilities are still higher for this high to be taken sooner or later, as we have very likely a 3-wave structure to the downside, increasing probabilities. This is a corrective structure, not an impulse. 1, 2, 3, 4, 5 means a truncated 1, 2, 3, 4, 5 means a truncated 5, as it's higher than the low of wave 3, which is extremely rare, so therefore never preferred. And just because this is a 3-wave move then, or at least higher probability it is, probabilities are higher to take this high sooner or later. So on the medium time frame, we are still looking for a move towards the upside. However, on the low time frame, looking at this range here, I prefer to wait for the low or the high of this range to be taken. For the bullish scenarios, we are preferably seeing the high over here taken first. In the bearish scenario, we want to go down first. As a very quick summary, one can say, if this is wave Y and we're looking for a move up, we want to see this high here taken, right? In the bullish scenario here, we want to see continuation to the upside, of course, after B or 2 is finished, which means very locally, if we're looking for a wave Y, W, X, and then a Y, well, wave Y, we're looking for a flat, high taken, or then a triangle, range, high taken without seeing the low, right? So in these scenarios, we're looking for the high to be taken first, while in the bearish scenario over here for potential triangle, A, B, C, D, E, we're looking for the low to be taken first. So let's wait and see what happens in this range, right? We're now at resistance and we continue to observe the price action. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.